Welcome to Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, Grant Nader from Benguela Global Fund Managers, Ricus from PSG Hole and One Ruimsig. Be sure to send your questions through email, stockwatch@bdtv.co.za, SMS 41392, or an X hashtag, Business Day TV, hashtag Stockwatch. Gents, appreciate the time today. Questions coming rushing. No surprise, a lot of them are Sasol. Ricus, you're a man who likes to take a gander at the charts. Does the Sasol bounce? Does it change your view on it? It's certainly been in a downtrend forever. Are you looking at Sasol now at 100 and thinking interesting?
Yeah, I had a price target of about 110 on it, and it's pretty close to that. And obviously on the back of as to what they're going to do with their American operations, whether they're going to sell it or sell part of it and get some cash to fix some of the other problems. It hasn't really changed my fundamental view on the company. Apart from the fact that any deal might strengthen their balance sheet, but I don't think it's going to relieve any of the problems. It's just giving them money or possibly giving them money to address some of the problems, but it's still a company with operational difficulty. And just taking one or two steps back, are there other companies, whether it be in fuels or chemicals that are fundamentally doing better? I think there are. So I think this is a trading opportunity so far more than anything else.
Grant, your take on Sasol, and I like what Ricus says. I mean, even if they got rid of their chemical business, well, the other side of the business has got significant challenges, should we say. What's your take on Sasol?
To be honest, it's one we've avoided for quite a while. I mean, it's quite well known. They just have a structural challenge in every aspect of the business. They're not really able to compete globally in the chemicals. It's so cyclical. It often counteracts some of the benefits they're getting on the other side.
Yeah.
The SA coal operations are struggling. So I don't like the business, and I think there is potential to unlock value if they unlock the chemicals piece. It is a big operation. There's a lot of value there. But of course, timing, it's going to take some time. All of that foreign debt is attached to that global chemicals business. So that would be a bit of a challenge to negotiate. And then, of course, in terms of cyclicality, this is a terrible time in the chemical cycle. So, I think this would play out over quite a long time, if it even happens at all. I don't think it's a reason to fundamentally change your perspective on Sasol. As Ricus said, maybe there's a trading opportunity here because, even dead cats bounce. It gets cheap enough and it might have a little pop. But I wouldn't fundamentally change our view on this.
No, I take your point, and it is, to me, one that looks very much more a trading opportunity. Question came through around Curro, and I have to be honest, I hadn't looked at the price chart of Curro in ages, notwithstanding I speak to the CEO, Zach Callisto, every so often. Grant, let's take your view on Curro. And the question is, quite simply, this one I missed. Is there still a chance to jump in here? When I last checked, it was 400, and now certainly it's 900. Grant, Curro, with all the O's. I'm not giving full diligence to all the zeros at the end there.
Curro.
There we go.
Look, it's one I've liked for a long time. I think it's a great business. And I think it's unfortunately reserved for the man in the street because it's very, very illiquid. There's a very small free float. It's very hard to trade. So put that aside, an excellent business that people have suddenly woken up to. I think it's got not only a good South African franchise, but the opportunity to grow in Singapore and Southeast Asia. I think it's real, and I think they've been executing really well. So I think there's a long growth runway there. Yes, it's run hard. You're paying up a little bit here. If you're taking a 5-10-year view, you can buy it. If you want to play the sort of tactical trading game, you need to wait. But it's one that I think you don't get a lot of chances to buy cheap. It's going to be a Capitec or a Clicks type of story where, if you want to own it, you eventually just have to buy it. You can't wait until the price is right. So, it's a good business, and I think they're going to continue to do well.
Yeah, and certainly I hadn't realized they got sort of 60% market share in Singapore. I had not realized that. Ricus, your take on Curro with all the O's?
Yeah, you should Asked Chantal Marx from Standard Bank, kudos to her. She had this stock probably about a year and a half ago, and by golly, was she correct. But yeah, as Grant says, it's not something that your institutions can really buy because of the liquidity issues. But I also agree with Grant. Operationally, they're doing very well. They have lots of room for expansion. It's well run, and yeah, trying to be clever on a reasonably illiquid share just to get it at a certain price, you might just miss it. I think the risk for that is too big, and as a rand hedge with a reasonable business, I think if it's something one can include in one's own private portfolio.
Yeah, and I take your point. Far too many times that I can recall, tried to be clever and then usually ended up not getting it cheaper, just not getting it and watching it leave without me.
Yeah.
Ricus, let's stay with you a moment. MTN, we know the woes, Nigeria, trying to get into fintech, chart looking interesting. Question coming through on the SMS, is it time to buy MTN?
Well, it's not one I'm following all that closely for all the reasons you mentioned, because you never know what Nigeria is going to do. That's a huge part of their business. It's basically a Nigerian operation with a South African subsidiary. Now, I think as far as I know, the latest little rally has to do with the possibility of telecoms in Nigeria being able to increase their pricing. So that's good news for MTN. I just don't know what's lying around the corner. It's still a precarious environment to operate in as far as the Nigerian government is concerned, because they do tend to change their minds every now and again without forewarning. So it's in the telco space, almost like Sasol. There's probably better global opportunities, or even something like Vodacom, which is not that exposed to the vagaries of external governmental influence.
I take your point. I mean, granted, it's almost operating in frontier rather than just emerging markets. I mean, it is tough spaces. We've seen currency devaluations that, just wipe out profits. Grant, your take on MTN at these levels?
I think the only thing it's really got going for it at these levels is that it's quite cheap. But there is a huge amount of uncertainty that remains. There's incredible geographic volatility in the earnings, as you said, the currency devaluations, and Nigeria's economy. Yes, they might actually let them push through a tariff, which I think will be a short-term positive. Perhaps a lot of that's already priced in. But thereafter, they've still got to deal with currency devaluations and an economy that's really under significant pressure. So it doesn't excite me. And if you just look away from Nigeria, that whole space is really growth constrained. Where are they going to grow? You can look at Vodacom; they've battled to grow for 10 years. So it's a difficult business. It's a difficult space to invest in. It doesn't excite me at all.
Yeah, I take your point. I mean, where do they grow? And we can absolutely see that. Grant, staying with you, question came through around Tsogo Sun. Had it for a while, enjoying it. Should I keep holding? What's your take on Tsogo Sun?
So it's not one I'm very close to, but I would say that given where we are, we've had 10 years of economic stagnation. We're finally seeing a little bit of light, a little bit of uplift in the overall outlook around consumers, around the economy. I think they're positioned to capture some of that improvement. And I think if we do see this improvement, there's a couple of years in it. So my view would be, if you have a level of optimism, and I do, I would hold Tsogo, or I'd give it a chance to start capturing that over the next couple of years. And I think you'll see some decent returns as consumers come back to life.
Ricus, your take on Tsogo Sun?
Yeah, I mean, also the one I'm following very closely, but that's mostly gaming, if I'm not mistaken. And I agree with Grant that if your consumer is better off, possibly there is some extra money to spend on things like gaming. So that is a positive, but in that space, whether it be where it depends on consumer strength, I'd rather go for something like Sun International, which has got a gaming element plus a hospitality segment to the operations, where you can gain from both your local and your offshore consumers. So it just spreads risk a little bit. But I'm not against Tsogo Sun, although I don't think it's now is a screaming time to go and buy it. I think it will just hopefully grow a little bit more than possibly your consumer spend in South Africa grows.
Yeah, pick up some of that sort of tailwind. A stock which probably neither of you follow closely. Orion, they're copper up in the Northern Cape. I don't know if either of you got insight. My only insight is that when you buy junior miners, don't plan on spending the money you're going to make. Plan on losing the money you've just invested, because that's generally my experience. Ricus, any insights on Orion?
Yeah, I haven't looked at them very closely in the past number of months, but let me put it this way: the operations that they are developing, because it is in effect a copper exploration share. So I've got no problem with their reserves. I think one or two of the plants are already operational, but these things take time and money. So far so good. I like the fact that they are in copper, because as far as resources are concerned, or metals and mining, I think there's a lot of agreement that copper is the go-to metal as a result of what's happening with the need for electricity by various sectors, including the computing side of things, and copper is such an essential element. But yeah, it's not merely a hole in the ground. There are reserves. They've got to get their operations going, and then hopefully Transnet can get the stuff to the ports.
I'd forgotten about the likes of transport. Grant, is this a stock that you have much insight for? Me? Junior mining is tough. I mean, even with it in the ground. I mean, yeah, in cases, I'm thinking Copper 360, they've got copper above ground, and it's hard.
Yeah, it's a tough space to be in as a junior miner. The Transnet constraints don't help as well, and the labor costs are not helping. I think the asset is great, and I can't comment too much on the mining specifics, cost of production, etc. But as you said, Simon, it's speculative. The small miners, don't over allocate your portfolio, but have a little flutter if you like it.
Yeah, I don't know that I've ever made money on a junior miner, and I think I've largely sort of grown up and moved on from them. Question coming through around education stocks. Ricus, let's start with you. Simple question. Universities don't have anywhere near the capacity. Our schools are struggling. What's the best local education stock on the JSE? Which would be, you've got what, Curro, Advitech, Stadia. Ricus, which would be your pick, if any?
Well, the pick in my accounts is Advitech, specifically because it's not only South Africa. I really like what they're doing in East Africa and Kenya specifically. But I think any one of those three, my preference would probably be for Stadia, because they're less capital intensive. In other words, they've got less bricks and mortars to take a look at. But that sector as a whole, I believe, is one of the few local sectors which can provide you a return in the immediate term without having to wait for a huge turnaround in the South African economy.
Yeah, parents are spending on education. They have, they do, and they will. Grant, local education stocks, do you have a pick?
Yeah, I would prefer Advitech as well, but then Stadio, I think, is a great little stock, and it's also playing in the tertiary space. So, you can still go through the government schooling, but there's a massive shortfall there, and you've just got to do it. So I think they're doing really well. They're incredibly well positioned. Unisa's falling apart, and that's a direct windfall benefit to them as people look for alternatives. So I think the whole sector is a great sector to invest in. You can invest in all three of them. But yeah, if you had to pick one, I'd go with one of those two.
Question coming through around Nvidia. Grant, let's stay with you. Held it up 3 times my initial investment. Looking pricey, looking worrying. Should I take profits on Nvidia? Would you be a seller at this point? Would you be a buyer, or is this a stock you've stayed away from?
We never bought enough. We have had some. What I would say is I would hold some. If I had made 3 times my money, you definitely should take some off the table because it's obviously grown significantly relative to the rest of your portfolio.
Yeah.
So right size the position so you can sleep tonight and leave it for the longer term. It's an incredibly innovative company with a lot of growth avenues. Yes, it could be cyclical and there could be a bit of a wobble with the capex rollout, but I think they've got enough going for them over the next over the long term that you still want to be invested in this phenomenal company.
Yeah, I saw their keynote at CES in Las Vegas a few weeks ago from the CEO,
Yeah.
and I got to say, it struck me that they're kind of only warming up on what their roadmap is. Ricus, Nvidia, your take on what has been a spectacular high flyer?
Yeah, as you said, what you watched from the CEO watched as well, and it is quite astonishing the what can be done. Does the share price reflect all of that? Who knows? At the moment, I'm just following a graph on that, making sure that I'm not overweight. As Grant said, you don't want to be overweight in anything ever, because things can go wrong, and in something as highly priced as Nvidia, it can go spectacularly wrong.
Yeah.
As it has in the past 5 years, when these things go down 20-25% in 3 or 4 months and then recover. You don't want to be in a position where you all of a sudden need cash and you're sitting with a great growth company that's taken a hit in the short term and now you've got a problem. But certainly no alarm bells ringing for me at the moment, even at current prices, as long as their revenue keeps on growing and as long as their margins remain the same and as long as their earnings remain the same, I think even at current prices, it's probably justified.
Another question coming through in another stock that's at highs. Richemont, Ricus, that update, which was Thursday, certainly looked better than I'd expected. The market seemed to agree, took the stock to all-time highs. Is Richemont still a buy at these levels, or do you wait? Because Richemont is one that can pull back, but of course that pullback might never be to these levels. It might pull back to a higher price at some point. Would you be looking at Richemont at these all-time highs?
I think longer term, it still depends on the Chinese consumer. For this quarter, it was certainly spectacular results because of their world ex-China sales. One quarter doesn't make a full year's worth of earnings, and if you do that over the past 4 quarters, Richemont hasn't. It's done okay, but nothing spectacular. If for some reason we do see a return of the Chinese consumer to the market, that might change my view from fairly neutral on Richemont as well as other luxury stocks to positive, because that's really in the end what you depend on, is your wealthy customers keeping on spending, and really a big part of that still is China. And despite promises and despite some steps the Chinese government has done to stimulate consumer spend, I don't think that's quite there yet. So I wouldn't necessarily be selling Richemont, but I'm not buying it yet.
Grant, Richemont are trading nicely at those all-time highs, which it has, it's the third time up at these levels. Would you be a buyer here?
I'd probably wait, but remembering that Richemont is one of those stocks you should have in your portfolio if you're a South African investor. So
yeah,
don't wait too long and don't stay out of it. Try and get something on the book, and look for maybe better entry points. But I think we're getting to a point of inflection in China, possibly post Trump's. There's going to be a bit of noise in the next few months. You might see an opportunity there to nibble on, or some Richemont might get a bit of a pullback. They're doing incredibly well in their jewelry franchise. It's like one of the best, and this is a company it's actually evolving over time. I think it's getting better. They've got rid of the online business.
yeah.
I think you need to have some Richemont. So maybe not here, but look to be buying.
Question came through, staying with the Ruperts, and the question is, seeing as the Ruperts are selling their British American tobacco, should I be a seller? I've held for 5 years and all I've made is dividends. Look, it's a chunky dividend payer and in sterling. Grant, your take on British American tobacco?
So I've generally avoided it because I like to own something that can grow, and I don't see the growth coming out of British American tobacco. Having said that, the new portfolio, the next generation products, they are starting to gain traction. They're just still smallish in the business. I think it's now about 15% of revenues. Over time, that's going to grow, and it's growing at a much faster rate than the old businesses. And eventually, there's going to be a resumption of some level of growth. But I don't know exactly where that tipping point is, and I don't really want to stay invested while that's happening. They're using debt to boost the dividends. So it's generally not a story I like, and it's in a dying industry, in the old business. So I would stay away from it.
Ricus, your take on BTI?
In order to save time, let me just say I agree with Grant, and I don't really have anything to add to that.
Okay, then we will move on to Grindrod, which is like the absolute other exception. Reports that Transnet's going to be opening some rail lines to private parties. Grindrod, obviously one of those. Ricus stocks come under a bit of pressure, offering opportunity. Obviously, there's some challenges at Maputo right now. Hopefully, that gets resolved and they can get back to full operations. Would Grindrod be on your shopping list?
It is, but the main joker in the pack is Maputo. I don't have a political view of what's happening in Mozambique, but what I do have a view in is that I like companies which are in a stable environment, and Grindrod is not, or a huge part of their operations isn't. If things calm down in Mozambique and we've got a bit of a structure, then I think Grindrod is pretty cheap at these prices, having gone down from about 15 rand, 16 rand a share. But yeah, it's to me it's still 50-50. I want some certainty that we're not going to have any adverse action in the political situation in Mozambique before I really go into it.
Yeah, I mean, we had a president sworn in, but to your point, I don't know enough about the politics. It's been messy. Grant, your take on Grindrod?
I think you've got to be careful of that political unrest in Mozambique. There's a bit of a pause now, it seems, but this could play out over months, if not years. So they're in a great sector. They're well positioned where I think there's a demand. They're going to benefit from this Transnet challenge for years to come. But yes, the uncertainty, I don't like those kind of binary outcomes. Is that business, does it become worth naught, or does it suddenly, resume operations as normal? So I would wait for some clarity on that. Otherwise, I like the business.
And I take your point. The Transnet deal, if and when it happens, is a long-term deal. We don't need to necessarily rush. Quick before stock picks, 91, nice ORM update. Grant, quickly your take on stock picks. On 91.
It's been a very big, it's been disappointing. I think they've really struggled to grow AUM the last year and a half in what has been a bull market in many markets. So I've been very disappointed. I think it's cheap enough here that you can probably own it. But I was hoping for more from them. So I'm watching this one carefully.
Let's go to some stock picks. Ricus, you're going with, and I'm going to get my tongue around it the first time, Lululemon.
That's right. Listed on the NASDAQ, they provide sportswear, to put it as simple as that. They've got three strategies going forward. The reason they're having strategies is because they've lost market share over the past number of years, because their product went out of fashion. So the one part is moving into menswear, which they're not usually represented, and obviously also updating the brand. The second is concentrated on their offshore expansion. They are only 20% of their sales are outside of America. They're going to try and get this to 50%, which is obviously a huge market for them. Runway, as the cliche goes, to influence their earnings. And they have the as I said, and they're moving into menswear. So if they get two of the three strategies correct, it's cheap at current prices. And the fun thing about their strategy is they've got the balance sheet to fund it. They don't have to go to market to go and get money. Their margins are spectacular when compared to their competitors. Plus, they are usually represented in the direct-to-client market and not dependent on wholesalers selling their stuff.
That's Lululemon. Grant, you're going with Salesforce.
I am. So in this world of AI and Nvidia and all this infrastructure being built. You know, the next leg is what are they going to do with all this capability? Salesforce is one of those positioned well to tap that market. So the agentic AI, as they call it, where you've got these software agents, AI agents actually doing things that humans would do, actually making decisions that humans would have made. They've got a very good database across the entire customer relationship management industry and within the clients that they serve. So they go laterally and vertically, and I think they've got a deep moat there. It's a very good business. They're one of the best. Well, they've shown one of the earliest signs of delivery in this space. Others are trying, but they're one of the first to market, and they're seeing good traction with clients. So I think at 26 times next year's cash flow, this stock is a cash machine, and it always has been a cash machine. So you've got potentially a new growth driver in a company that's margins are opening up, cash flows are opening up. You know, I think it's an exciting way to tap into the growth of AI's actual application into the real world.
Yeah, I like that, sort of AI adjacent. And I love the codes out of the years. Code for this, CRM. We'll leave it there. That's all for Stockwatch today. Thanks to our guests, Grant Nader from Benguela, Global Fund Managers, going with Salesforce, Ricus from PSG Hole and One Ruimsig, going up with Lululemon. Up next, the close. Stay watching.